Insurance again? I just saw an ad about it and I still don't get how it actually works. Like, it feels like you're just throwing money into a black hole every month.
Exactly. And somehow these insurance companies are making millions. Oh, what do they even do with our money? Uncle Mike, you're always full of weird facts. What's the real deal with insurance?
All right. Pull up a chair and let me take you both on a little trip. You might be surprised. Insurance isn't as boring as you think. It actually has a wild past. Pirates, fires, ships lost at sea, real adventure stuff.
Wait, did you say pirates? I thought insurance was invented by accountants.
Not quite. It actually started with merchants and sailors. Picture this. It's the 1600s in London, and traders are losing ships full of spices and silk to storms and, you guessed it, pirates. They hung out in coffee shops and said, what if we spread the risk? That's how modern insurance was born, right there in a coffee shop, not a boardroom.
But you're saying over coffee, they were like, pay me a little now and I'll cover your ship if it sinks.
Exactly. Let's simplify it. Imagine Sam tells Jack, hey, I'll give you $10, but if I lose my phone, you have to buy me a new one. That's insurance right there. Sam is transferring his risk to Jack. If the phone is safe, Jack keeps the money. But if Sam drops it in a puddle, Jack's paying up.
So Jack becomes the insurance company?
Bingo. Now imagine Jack gets 100 people to do the same deal. Each pays him $10 to insure their phones. That's $1,000 in his pocket. Even if one or two people lose their phones and Jack pays out $100 or $200, he still makes a big profit.
So it's like gambling, but with math and contracts?
More or less. Insurance companies are master risk calculators. They collect money, called premiums, from lots of people, knowing only a few will actually need payouts.
Okay, but how do they know how risky something is?
Good question. That's where underwriters come in. Let's go back to the 1600s. A trader worried about pirates would talk to a broker, who'd check out the ship, the route, and the cargo. Then the broker shows this to underwriters, who decide how risky the trip is. They either accept the risk or tweak the policy. We'll cover storm damage, but not pirates. Or pay a bit more and we'll cover everything.
Sounds like the underwriter is the guy who signs the check.
Exactly. In fact, the name underwriter comes from them writing their names under the policy agreement. The lead underwriter takes the biggest risk and signs first.
And they split the risk too?
Right again. One underwriter may take 40%, another takes 20%, and so on. That way, if disaster strikes, no one person is ruined. It's like a financial safety net made of multiple ropes.
Okay, but what if the ship really does get attacked by pirates?
Then, the broker informs the underwriters, who evaluate the claim. If everything checks out, they pay the money to the broker, who passes it to the client. Simple as that, though there's usually negotiation involved.
So the broker doesn't keep a cut from the claim?
Nope. The broker already made their money up front from the premium. Their job now is to get the best possible deal for their client, hoping to earn trust and future business.
Seems like a lot of moving parts. What if the underwriter doesn't want all the risk?
That's where reinsurance comes in. Think of it like this. If Jack took all those $10 phone deals, but didn't want to hold all the risk, he could sell them to Sam for $9 each. Jack keeps $1 per deal, risk-free, and Sam now holds the risk. That's reinsurance.
So it's like passing the hot potato of risk until someone's brave or crazy enough to hold it?
Pretty much. It's all about spreading the risk. Lloyd's of London, by the way. Still operates like this. Lots of underwriters and brokers forming deals every day.
But this started with ships. What about things like home or car insurance?
Great point. After the Great Fire of London in 1666, people realized they needed to protect their property too. Sir Christopher Wren even included an insurance office in his rebuilding plans. Now we've got insurance for everything. Homes, cars, health, pets, everything.
I even saw alien abduction insurance once online. Was that a joke?
That's real, rare but real. People can insure almost anything these days. The business model has just gotten more complex. Insurance companies now make money not just from premiums, but by investing those premiums.
Wait, so they take our money and then invest it?
Exactly. Imagine a company collects millions in premiums. They don't just let it sit around, they invest it in stocks, real estate, or bonds. Even if they pay out more than they collect in premiums, they can still make a profit through smart investments.
So insurance is just the cash flow engine?
That's one way to look at it. It's a financial tool to generate steady income and build wealth, while protecting people from risk.
Wow, that's way more interesting than I expected.
Same here. So, Uncle Mike, do you think insurance is a scam?
Only if you buy it and don't need it and you don't understand what you're covered for. Otherwise, it's peace of mind. You're paying for someone else to worry about your worst case scenario.
Makes sense. I guess next time I pay my car insurance, I won't grumble too much.
Just read the fine print, boys. And remember, the house always wins, unless you understand the game. So what do you think? Is insurance a smart safety net or an overpriced gamble? Drop your thoughts in the comments. Hit that like, share, and subscribe button. See you in the next episode.